Let's go to Ed now and check out what the investors today on the market thought of that BHP profit fall. How'd they go, Ed?
Look, not great, Ross. The shares, though, they held up reasonably well when you think about it. Like, the results were reasonably good. The better-than-expected dividend really gave the share price that additional support. You can see here the majors here all did decline today, and that's really due to iron ore prices falling roughly 3% overnight. So, decent result for BHP. It was off a little bit, though, today, Ross.
OK, let's go next to Australia's largest pathology and radiology company. That's Sonic Healthcare. Now, in the past 6 months, it fell victim to COVID. Now, this sounds a bit strange, I know. Actually, it's the end of rigorous COVID testing that's caused Sonic's headline profit to fall 47%, you can see here, to $202 million. Now, if you exclude COVID, Sonic's revenue gained 15% to $4.2 billion. But Sonic's COVID pathology revenue fell, get this, from $379 million in the December half to 2022 to just $39 million in the same period last year. The interim dividend, you can see there, 43 cents is 1 cent a share higher on that same period last year. The company warned that full-year profit is going to be at the lower end of its previous guidance, somewhere between $1.7 and $1.8 billion. So, Ed, I'm guessing that just might have put the skids under the Sonic Healthcare share price today.
It sure did, Ross. Look, you're spot on. Sonic Healthcare sank today. It was one of the worst performers on the market. When your profit falls by almost 50%, you usually get punished. That's certainly what happened today, down 7.8%, Ross.
OK, let's go to another one. This is a surprisingly large company, the investment platform Netwealth. Profit jumped 28% to $39 million thanks to strong investment inflows. Funds under management climbed almost 25% to $78 billion. And let's put that in perspective, shall we? Magellan's funds in the same period were just $37 billion. Netwealth increased its dividend by 3 cents to 14 cents a share. Ed, Netwealth.
Look, Netwealth had a pretty good day. It was one of the best performers on the market. In a further update this morning as well, the company says as of the 16th of February, it's lifted those funds under management again up to about $81 billion. So Netwealth shares, they were up about 5.6% today, Ross.
And look, a company I know you like personally, because you are a big four-wheel driver, is ARB Corp. Now, it's famous for making bull bars and also four-wheel drive accessories. So the sales here, they were flat at $4.2 billion, partly due to industrial action at Australia's ports. Also, not quite as much COVID driving around the place as well, I reckon. ARB had previously flagged flat sales, but its profit still, you can see here, jumped by 8% to $51 million or so. The dividend was raised to 34 cents a share. Ed, look, let's be honest, ARB, it's been a favourite for investors for a long time.
It has been, and it did surprisingly well today. It was one of the day's best performers. It actually climbed to its highest level since May 2022, so almost in 2 years. Sales of products like bull bars to customers such as Ford, Toyota and Isuzu, that jumped roughly 54% during the period. So massive increase there, helped the shares up 10%. And Ross, there was one little mistake in that graphic. Their sales were $347 million, not $4.2 billion.
347 million, let's get that right, shall we? Exactly. All right, now listen, the other one is the gloves and protective clothing maker. That's Ansell. It said it's cut 1,300 jobs worldwide in just the past 6 months. Today, it said sales in that period fell 6%. Net profit collapsed almost 70%. Now, the main issue here is also COVID, a 15% post-COVID fall in surgical sales, mainly due to customers destocking. Remember, they had so many protective gears and gloves and God knows what else. Well, the dividend was cut to US 16.5 cents a share. Let's be honest, Ansell's going to get clobbered for that, isn't it?
Yep, they got crunched. Probably not as much as you'd expect, though. Remember, Ansell, it boomed during COVID, massive sales of masks and gloves. Finally, it's coming back to earth. The job cuts were also announced today equate to roughly 9% of its global workforce. Its shares came off by about 2.1% today, Ross.
OK, so...
And, turning to the overall market, the ASX 200 opened lower this morning, pushed down by the materials sector and energy stocks. Telcos and property REITs jumped. The ASX 200 finished the day flat, basically just down 6 points. Intelligence software company Nuix bounced back after reporting a loss yesterday. Investment platform Hub24 jumped after some strong half-year results. And mining services company Perenti was up too after reporting record revenue during the half year. Now, casino operator The Star, it got crunched after coming out of a trading halt. Remember, the New South Wales casino regulators holding a new 15-week inquiry into the Star's licence. Metal recycling company Sims dropped after reporting a 35% fall in profit, and lithium miner IGO was down about 3.7%. And here's the market reaction to the ANZ takeover of Suncorp being approved by the Australian Competition Tribunal. You can see Suncorp shares up pretty strongly, up about 6%, and ANZ were off by about 2.2%. And Ross, that's markets.
We'll get back to that one. I'm still thinking about those Star shares. They absolutely got hammered, didn't they? I know one of its major shareholders, Bruce Matheson, was buying recently above 50 cents a share. So it'd be interesting to see how they all go there.